And traders, welcome to the channel. Market chart pattern today is 8th of May 2025. Hope everyone is having a good day. We'll take a look at the key markets. We'll start by taking a look at the equity indices worldwide, and then of course the US market, and then we'll also take a look at some of the other markets such as the US dollar, interest rate markets, and gold. As always, the video is for educational purposes only, and it's not a financial advice. So it's going to be a little bit of a shorter video, so I will not go into too much details into technicals of explaining the pattern formations, but we'll just discuss the key kind of patterns that are being forming and the key levels to watch. All right, so this is the daily chart of Dow Jones Industrial Cash Index. This is the chart we are using for our timing purpose, and today is the 8th of May, and what we have is a key timing coming in on the 8th of May. 8th and 9th of May, we have to give it 2 days, and then if we just go and take a look at this on the weekly chart, then this week I also have another key timing coming on the weekly chart as well. So we'll be watching the price action. Tomorrow is of course Friday, so the week will conclude. So we'll be watching the price action very closely, and what this timing is going to bring for us. Okay, so let's start by taking a look at the Sensex, which is the Bombay Stock Exchange Index, and of course you might have seen in the in the newspaper, in geopolitically there has been some tension between the neighbors of India and Pakistan, and I'm not going to go into details of the conflict, but there is a conflict which has arisen over the course of 72 hours in the past, for example. But just like taking a look at this on a technical perspective, we have been watching this market, and I can tell you that this is when the market topped, and then it formed a very nice pattern formation right at the 38.2% retracement, and the pattern filled with double top, and then it has gone right to the 61.8% retracement, and also the 1.272 expansion of this swing. So now this is a potential resistance level, and thus far we have not seen the market able to take this or move above this. So we are looking at 1, 2, 3, 4, 5 trading days. It's just gone into sideways market. Now if the market begins to take these lows out right here, then it's got a potential to at least come down to this 20-day moving average, and even beyond that as well. And look how many gaps are there. These gaps are likely to get filled. So only if the market is able to convincingly get above this level right here, it's got a chance to move. Otherwise, it does look like this is a resistance level for this market right here. Now if we take a look at the HSI, which is the Hong Kong um, Hang Seng Index futures market we are watching, it's just also not gone anywhere. It's just really hovering around the 61.8% retracement. German DAX German DAX has been extremely strong. This is what we discussed. Look at this V-shaped recovery, testing the all-time highs. This is where potentially we can find some resistance from these old highs right here, just because of the structure. And if we just look at what's happening in terms of the price action, it's just consolidating right here as well. After it formed this really nice bottom right here, you can find the details of this pattern in the previous video, which is done for the stock indices. Now, really interesting is the UK market, is the FTSE 100, and what we are looking at is this market is just also consolidating right here, and we have had, like, 2 consecutive negative daily closes. If there is a pullback, we could expect a pullback of this much at least, where it can find some support coming in from the 20-day moving average. And if let me just draw the retracement, what we are watching is basically right to the 78.6% retracement. This is where the resistance is coming from, and the market has just gone pretty much nowhere. So the Indian stock market also at resistance level, the UK market resistance level, and the German DAX has got structural resistance from the on left hand side. So quite interesting what is happening. Now let's take a look at the US market. So we'll start by taking a look at the NYSE, which is the New York Stock Exchange Composite Index. And here, this market is also right at the 78.6% retracement. Let me actually try to highlight this like this. There we go. And here, that's one resistance. Also, we have got this one-to-one price projection ABCD completing a little bit higher. So it's also in this zone where we can find some resistance coming into this market. So it's going to be an interesting formation. Today the market rallied. At one time it was quite strong. It hit this, or it just came very close to hitting the exact 78.6% retracement. In my opinion, was just close enough, and we have seen a lot of the gains actually were given up by the market. So again, key to watch is this key level right here. And then let's take a look at the SPX, which is the S&P 500 cash, and there we go. So we had been watching for this ABCD, the red one, as potential target, and what the market did is today it just came very close to the actual level. So the high was 5720, and the actual high we were we were watching was for 5749, and the high was, so missed it by about 20 points, but still got a chance to hit the exact number. But this is the region we are watching for because of this one-to-one price projection ABCD, and here potentially we could see some resistance to come in. And then of course we have got the structural point C right here close by as well. So this region is likely to offer some resistance. However, the market is really strong because of some event, and it just gaps through it, or it's really strong that it's able to take the point C out. And that's changing a lot of things. There's a lot of strength coming in, and in that way this CD, like this red one, will be expanding, rather extending by 1.272 of the AB. Now let's take a look at this on the ES as well, which is futures chart. The futures slightly different picture because the ABCD has got quite some while to go and touch this one. This is the difference between the cash and the futures, and we should be viewing both of them. Sometimes because the rollover in the futures, the data get a little bit distorted as well, and only over time it gets kind of reconciled with the cash. And then if we take a look at NDX, this is nasdaq 100 cash, also right at the ABCD. I've not drawn it. Let me actually draw it for you. So it's like this. Here we go. And of course we have this I think I've not drawn this properly because I should not have. Oh yeah, sorry, my mistake. Actually, this is a little bit higher right here. And let me get this out of the way. Okay. And there we go. Boom. So very close to that. And if we just take a look at this on the NQ, then a slightly different picture because the CD leg points to point D being a little bit higher, getting into this zone that we are watching. And just by taking a look at what is happening on the Dow Jones, very quick one. Dow Jones on the futures chart also getting towards this region where we are expecting it to go, and it could also offer potential resistance level. So this is what we are watching in the key indices. Let's take a look at what is happening with the US dollar. Here we go. So the US dollar is strengthening. It has taken out this swing high. This is what we were discussing previously, that although the market was right at the bearish symmetry, but the number of days it has taken a lot more days than what we have seen in any of these moves here. So I think this bearish symmetry is breaking, which indicates that the US dollar is gaining strength. And on the flip side, if we just take a look at this on the Euro USD, for example, then we can see that after completing this nice ABCD right here, it is now moving lower, and it's got a chance to move quite a bit lower as the US dollar strengthens. Okay, now interest rate markets, very quickly, let's take a look at the US Treasury note. This is the 2-year. Let me go back to the so here, as the US dollar strengthened, So did the yields. Getting a little bit of a mixed picture with the yields. And let's take a look at the 10-year yields also strengthened. This is quite interesting because we are watching for the yields to move lower, but the price is telling us something a little bit different might be in place. So kind of range bound, difficult for to get a clear picture of the scenario. And if we just take a look at this on the 10-year treasury notes, here we go. Yeah, looks like it's got a chance to move lower here, yields rising. And if we take a look at this on the long bond futures, yeah, I think if it breaks this lows, then it's moving a lot lower, yields moving higher. That is quite interesting. Yields moving higher, dollar strengthening, and the equity markets also hitting really key levels, which could potentially be resistance levels. We'll have to wait and see to get some sort of negative close and some candlestick pattern formations for signals. So this is what we are watching in the key US markets and some of the global markets. From the equity markets perspective, 8th and 9th of May, really important because of the key timing coming in. So we'll just keep on watching the price action for the equity markets for tomorrow. And then, of course, I'll be back with the weekend update with regards to the equity markets and some of the other markets that we like to follow. So thank you very much for watching the video. And if you like our content, how we are looking at these markets using pattern recognition, Fibonacci retracements, expansion and extensions, and then please do subscribe to the channel. And if you learned something from the video, you found it of educational value, give it a thumbs up. I will really appreciate that. So thank you very much. Good luck, good trading, and speak to you guys soon.